G'day there, investorholics. Welcome to another ETF Spotlight review. Today we're taking a look at ZYUS, which is the S&P 500 high yield, low volatility ETF, and this one's just brought to you by Global X. So the fund, might be of interest to investors seeking to grow their capital. Using a product, this product, essentially as either a core or satellite component of the portfolio. This one sort of gives you sort of almost a counter-cyclical type exposure to US stocks. So you're not looking at the high-flying stocks. These are the sort of more quieter, more stable stocks. So in a high market, when you look at all these companies with high growth but no operating profits or not generating any revenue, this ETF will probably underperform the market or just keeping up with the market. When the cycle changes like it has now, this ETF seems to be doing a bit better because it's holding companies that are actually making money. So it's a little bit of a counter-cyclical type of product, I think anyway, my feeling, and sort of just having a look at it and sort of watching it and see what it does. I think it's sort of a little bit counter-cyclical. Has some unloved, sort of more boring type companies in the portfolio. Hey there, investorholics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, so looking at the Global X S&P 500 high yield, low volatility ETF, and obviously all these ETFs seek to provide investors results that correspond with the price and yield performance for all the fees and all that sort of stuff of the index that we're tracking. In this case is the S&P low vol high dividend index. So the index is, as I kind of mentioned, the S&P 500 low volatility high dividend index, which serves as a benchmark for income-seeking quality investors. So I sort of mentioned at the start of this video. It's not sort of the high flyer looking for income from this one. The index is designed to provide exposure to 50 high-yielding companies on the S&P 500 while meeting diversification, quality, and tradability requirements. You have semi-annual rebalancing, so twice a year. The index selects from 75 high-yielding eligible shares from the S&P 500. From this selection, the least 50 volatile shares are included in the index. Index constituents, God's sake, get the right bloody word out, are weighted in proportion to their dividend yields. Okay, why are we looking at this one? So, high growth potential, as I sort of mentioned there, it gives you exposure to 50 of the highest dividend yield equity securities from the S&P 500 index. Quarterly distributions, so as it kind of says, you're going to get a dividend every 3 months. Low volatility, which is what interests me. So use this as almost a ballast to your portfolio if you want to look at it that way. So when other things are going up, this one doesn't perform as well, but when the high flying part of the market's going down like it is now, this ETF's performing pretty well, so it acts as a bit of ballast, gives you a bit of counter-cyclical exposure. So ZYUS index methodology screens for equities that have established low betas relative to the S&P 500 in the effort to produce low volatility returns. So, I mean, that's kind of why I like it. You're looking for something a bit low volatility. Especially useful if you're a long-term investor. If you're a short-term investor, you know, I mean, you might need to look at this product a bit further. But yeah, I think it's definitely interesting anyway. Okay, at the time of the research, we're trading at, so the net asset value was $13.34. It was trading above that at $13.54. This is a small ETF. You're looking at 81 million or thereabouts. Management fees pretty reasonable, 0.35%. You get quarterly distribution, so every 3 months, and your rough yield at the moment is 3.3% or thereabouts. So this ETF provides a unique US equity portfolio with different characteristics to an investment in the typical S&P 500 ETF. Obviously, we're looking for the low volatility, and this ETF sort of screens that out. So yeah, I think something definitely to look at. Just a different way to invest into the US, looking at some low volatility stocks. As always, we need to make sure we're doing our research. So, have a look at IVV or NQD. Maybe not necessarily low volatility, but I think there's some other low vol ETFs out there that I might look at a later date. Okay, so as sort of mentioned before, performance-wise, since inception, looking at just above 9%, which is about average. Over last year, you would have done 10%, which isn't too bad. I think this one definitely isn't something to hold in your portfolio for a short time. This isn't really for trading. I don't think anyway. I think this one's a sort of buy and hold for a longer term sort of outlook. So you're looking at Alturia Group, which I suppose is cigarettes and all the rest of it. Kinder Morgan, which is infrastructure. AT&T, telephones and all the rest of it. Gilead, Gilead Science. So you're going to get a bit of exposure to some biotech type stuff there. Iron Mountain, which is your boxes and storage. Williams Cos, not really sure who they are. Dow Inc., which is indexes and that sort of stuff, and a few other different things. So got Philip Morris there. So like I was saying, it's sort of a bit of anti-cyclical. There's some companies in here that some people don't like, but they just tick along. These companies, they're not going to shoot the lights out, but they're going to be there, I think, for the long term. And when they don't meet the criteria for the index, they get when the rebalance comes, they get thrown out. So I mean, that's the beauty of the index. You can just if they're not performing, they just get thrown out of the index. So if we can get our 9 to 10% every year out of this one on average over the long term, I think that's a really good outcome. I like this one. I own this one. I've owned this one for quite a while. That's not an endorsement for anybody to buy. It's really an endorsement just to have a bit more of a look at it. Like I say, I use it as a counter-cyclical type of thing, because the companies that the companies in the top 10, top 20 are companies that are not traditionally looked at too hard by the rest of the market. So there might be some opportunity for mispricing and things there, but at this point in time, it's not a buy, because it's trading above the net asset value. So it's something to keep an eye on. I kind of keep an eye on these things, and just if it happens to dip below the net asset value, you might pick up a few here and there. So definitely one to have a look at, guys. Bit different. I look at things a bit differently to the normal type of investments, but I'm building a sort of an income sort of portfolio. So you want to be able to smooth. On the downs, you want things to smooth out your income. So this is one of the ones that I kind of are building a position into to do that into my income portfolio. Hopefully that was of interest, and hopefully the presentation was pretty good. Hit the like there if you liked it, and also don't be afraid to subscribe. It costs you nothing. Just click on the subscribe button, and then you'll get all the up-to-date videos. Try to do 1 to 2 a week. Just keep the content coming to keep you guys engaged. Thank you very much. Ciao. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your financial horizon and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe, greatly appreciated. Thank you.